Before I begin, I just want to remind you that I am not a financial advisor, and please read the disclaimer on my channel page before viewing this video. I am not responsible for any losses you may experience in the market, and nothing I say should be taken as investment advice. Researching mutual funds is an important part of managing your portfolio. You might be interested in investing in the new mutual fund that was just added to your 401k plan. Maybe your financial advisor is suggesting you invest in a certain mutual fund, or maybe you're just looking at putting extra cash into an investment vehicle that you hope will offer you adequate returns. Many mutual funds have minimum initial investments that is in the thousands of dollars. If you are thinking of putting $5,000 into a mutual fund, please do at least the same amount of research that you would do if you were looking at buying a $5,000 home theater system or other electronic device. In this video, I want to show you how to research mutual funds using Morningstar.com. Now, you might already be familiar with Morningstar, but if you're not, I definitely recommend that you bookmark this page. So up here in the quote box is where we'll start, and up here is where you can enter in the ticker symbol of a mutual fund you are already interested in. If you do not know what the ticker symbol is, you can just start typing the name of the fund in the box, and the fund should appear in the drop-down window below. So for example, I'll do the Fidelity Small Cap Value Fund, and all I had to do was actually type in Fidelity Small, and it's right here, Small Cap Value. I just click on it, and it takes me to the Fidelity Small Cap Value page. So let me just go back to the home page here. Now what we are actually going to do is screen for mutual funds that meet certain criteria. To screen funds, you need to go over to the Fund tab and click on it. This obviously takes you to the Funds page. Now if you do not have an account with Morningstar, you will need to set one up. It is easy to do and it is free to have. And if you do not want them sending you emails for special offers, just make sure that you uncheck those boxes in the account setup page. So now we're going to go over here to the left hand side and we're going to find the Tools category, which is right here, and we're going to select the Fund Screener. This will obviously take you to the criteria page of the fund screening tool, and here you can select what you want for the mutual fund type, fee structure, rating, and all that stuff. So we'll just make some quick selections here. Just going to do this randomly. I'll just do mid-cap value, category average. Oh, not so randomly. I will do what I do like. So category average there. Minimum initial purchase less than or equal to 10,000. Load funds, we do not want load funds. Expense ratio less than or equal to category average. I'll do 4 and 5 star funds. I'll do risk better than or equal to average. I don't care so much about the returns. I'm more worried about how the funds performed against this benchmark, and we'll go over that in a second. Turnover less than or equal to, I like low turnover, so 75%. Total assets less than or equal to 5 billion. Average market cap we don't have to worry about, and the other stuff's all set. So we're just going to click show results here. So here's the list of the mutual funds that the screen found that match my criteria, and I'm going to select this Vanguard fund right here because I like how it has a low fee relative to the rest of the funds on this list. So I click on it, it takes me to the page. Alright, and so here's the NAV, and this is where what the fund currently trades at in the market. And next over here you will see the yield, and you notice that the yield tells us the size of the dividend. So this fund pays a 1.6% of the NAV in dividends each year. The yield will always be changing due to changes in the NAV as markets fluctuate, and also changes in the makeup of the portfolio. So let's say if this fund sells several dividend paying stocks and instead buys non-dividend paying stocks, that will cause the yield to fall. Next to the yield you have the load, and you want this to say none. So ours does say none. And most funds have dropped their loads over the past decade, and there's really no reason you should pay a load fee. The only time you should pay a fee is if you sell a fund within 90 days of purchasing it. But if you are a serious investor, you should have a much longer investment horizon than 90 days, so you should not have to worry about that fee. Total assets is next. I like to see funds here that have total assets that are less than $5 billion because funds that are too large tend to have a more difficult time outperforming their benchmark. I'm not saying that they can outperform if they go over $5 billion. There are some out there that definitely do, but it is more difficult for fund managers to accomplish this important goal if the fund is too large. I also like funds that have more than $250 million in assets under management because it shows that the fund is more established and most likely did not just start last week. Next to it we have the fee, and this category is probably the most important to look out for. The fee is the rate for investing in the fund. So you will spend 0.47% of your assets under management every year to hold this fund. Now, you want this number to be as low as possible and make sure that the fee level is not above average. Now, if you have a financial advisor that does charge a 12b1 fee, you'll probably have a C share of the mutual fund, and that just means it has a higher 12b1 fee to pay the advisor, and that's how you pay your financial advisor for their services. Now, large cap funds tend to have lower fees than some of the more riskier funds, so that's why I like to do a comparison of the fee level compared to other funds in that category. And this is because it's more costly to run those riskier funds, and therefore the fund needs to charge a higher fee to cover those costs. So just make sure that the fund is not charging an above average fee relative to the other funds in its category. So this one's low, so that's definitely alright. Now turnover, which is right here, is the percentage of the fund's assets that change every year. A turnover of 100% means that a company is held in the fund for an average of only 1 year. This fund has a turnover of 33%, meaning that the companies are held on average for 3 years. I like mutual funds with lower turnover rates because it reduces the amount of taxes I'll have to pay each year. The higher the turnover ratio, the more capital gains that will be distributed back to the shareholders. The shareholders will then have to pay taxes on those capital gains, and that reduces the return on their total investment. Now the status of the mutual fund just tells you if it is open to new investors. Open means it is, closed means it's not. Now if the fund is open, you will need to invest a minimum amount of money to open an account, and that minimum's right here. So for this fund it's $3,000. Now the rest of the things on this part of the page here are just the 52-week range, which is the range the NAV is traded in the last 52 weeks, the category, which means it says it's a mid-cap value fund, and the investment style, which agrees that it's a mid-cap value fund. So these two agree, so it means the fund manager's keeping in line with what he says he's doing. Now if this all of a sudden says mid-cap growth, then the fund manager might be getting a little too aggressive or something, but those usually should match and you should be all set. Now you can use the chart down here, or you can go over to the chart button up here, and this will bring up the chart page, and this is a little bit bigger of a chart, and here you can compare the historic return of the fund with other mutual funds, ETFs, or other investment vehicles. Just enter in their ticker symbol or name right there and click go, and then just click OK. Now I am not really concerned with how the fund has performed on its own. I am more concerned with how the fund has performed relative to its benchmark, represented by this orange line right here. Now the green line is the S&P 500. So I want funds that have outperformed over the 10-year, 5-year, and 3-year periods. So this means that, I'll go back to 10 years here, this means that the blue line, in order to have outperformed, the blue line must be above this orange line right here. So in this case it is. Now if the orange line is above the blue line, it means it did not outperform the market. So like I said, the green line is the S&P, so it's not as similar to the orange line. The orange line represents all mid-cap value funds that are in the market here. So if the fund does not have a 10-year track record, just make sure it has at least a 5-year track record. I like to avoid funds that are younger than 5 years old. And this is pretty much just because it's hard to show that the fund's established itself and that it can outperform the market on a long-term basis. Now if the fund is not outperforming the benchmark, there is no reason you should be invested in it, and there's also no reason you should be paying a higher fee than if you were invested in a better performing ETF that follows the benchmark. Now unfortunately, a vast majority of mutual funds do not outperform their benchmarks over the long term, so this is a good way to weed out several funds you might have been looking at, since most will probably fail this test. Now this fund does seem to pass that test, but just barely, and if I were to own this, I would watch it closely to make sure that it does not underperform the benchmark. A few bad quarters, or maybe even a bad year, are kind of forgivable, but I usually dump funds that have underperformed for a few consecutive quarters, and so just keep an eye on ones that are close like that. Now once you have narrowed down your list, the final check is to see who is running the fund. Now click on the management button right here, and this will bring up the list of fund managers and their qualifications. Now you want to check the experience, education, and if they have their CFA charter. Ask yourself these questions. Have they been in the investment industry for several years? Do they have a degree that is in finance, economics, accounting, or some other related field? And do they have their CFA or Chartered Financial Analyst charter? Hopefully you can answer yes to at least 2 out of 3 of these questions. So just remember that you are hiring these managers to invest your money, and just make sure that they have the qualifications needed to be successful stewards of your capital. Just a quick note, the CFA charter, which you can see on a few of these guys here, is a very difficult designation to earn in the industry. It requires hundreds and hundreds and hundreds of hours of studying, and the pass rates on these exams are between, depending on exam, most of the exams are 40%. As of right now, the final exams are around 50% pass rate. There are 3 exams. So it is difficult to earn that charter, and it's a good thing to see portfolio managers having that charter. Now, so for example, I'll just do it quickly here. I'll do Richard Greenberg. He has 25 years experience, good. I'm not so interested in the BA in psychology. I don't know, that might help him with behavioral finance, but I'm more interested in this MBA from Wharton. And Mr. Greenberg does have the CFA charter. So he has the CFA charter, the MBA, and the 25 years of experience. He's 3 for 3. Good. Now I'll go to this guy 2 below him, John. I see 31 years of experience. That's good. He has the CFA charter. That's good. I don't see the degree, so I can't give that to him, but 2 for 3, like I said, that's good. So, between those 2 guys and these guys all look like they're pretty good. I'd say management passes the test. So I'll just go back to the quote page, and that's it. If the fund passes all the tests, it has a low fee, has low turnover, it's outperforming its benchmark, they have qualified managers, a good Morningstar rating, and everything else we discussed, then you have done your homework on research in the fund. Always remember that past performance is no indication of future results. All investments can lose money, unfortunately, and even qualified people can fail to perform well. By doing adequate research, we hope to limit the chances of poorly performing, but there are never guarantees when it comes to mutual funds. So I just want to wish you guys the best of luck in your mutual fund research. Please do subscribe to my channel, and thank you for watching my video today.